Hi guys, welcome back to my channel. So I'm just going to film a cooking video for you guys today, and I'd figured I'll have a quick chatty video with you as well because I saw in my community tab when I asked if you were aware of the Silicon Valley bank collapse. Some of you said yes and some of you said no, so I figured I'll just give you guys an update. But just before we jump into that, I'm just peeling the carrots, chopping the onions, chopping the zucchini, and I'm going to saute that in a little bit of water just to cook it down because I don't think I need oil in this particular meal. Anyways, back to the point of discussion. The reason for the Silicon Valley bank collapse is because of its lack of diversification, and basically the customers didn't feel safe leaving their money in the bank, so a lot of them were withdrawing their deposits at the same time, which obviously further worsens the situation. And I also did read that the Silicon Valley Bank, they were lending a lot of money to startups and venture capitalists that were within that tech field. And as we all know, tech's having it pretty rough at the moment, and especially with the rising interest rates. So that was probably two of the main reasons for its collapse, from my understanding. If there's another reason, please let me know down in the comments. Also, guys, I'm just going to add this Domino spicy pepper sauce in as well, saute it all together. Then I'm going to cut up some of the parmesan and onion sourdough bread and toast that, butter it, and serve it together with this little concoction that I've made. So it's my healthy, tasty lunch. Hey guys, so in this next clip here, I'm just preparing a few things. So you would have seen in my previous grocery haul, I purchased some markdown onions, and I know with this particular brand, it doesn't last as long in the fridge. So what I tend to do is prep it. So peel it, wash it, chop it, put it in a Ziploc bag and put it in the freezer. One, it's convenient for me to use throughout the week if I'm really, really super busy. Two, it saves my food from spoiling. So this is what the next clip is going to show you guys whilst I have a chat with you guys about a few other topics. So back on topic, guys, of discussion. Yes, it's really unfortunate that Silicon Bank is facing a collapse, but my bigger concern is the current conditions that Credit Suisse is in. So they're under fire at the moment as well due to a myriad of reasons. One being obviously wealthy clients are pulling out their funds due to lack of confidence, and there's also been a lot of alleged issues such as misconduct, money laundering, losses the bank is facing as well. And this is a little bit more concerning than the collapse of Silicon Bank, in my opinion, only because Credit Suisse is a much larger bank, and it was established in, I think, 1856-ish. So if Credit Suisse collapse, I think that would ruffle a lot more feathers in terms of concerns. Now, in regards to Australian banks, in my opinion, I think at the moment we're quite stable. I think our regulators do quite a good job of, I guess, making banks have enough capital requirements. That being said, I think I did look up the financial claims scheme briefly. Don't quote me on this. This is just my understanding from what I read. So best for you to research and look these things up yourself as well. But from my understanding, the financial claims scheme covers up to $250,000, I think, in savings accounts if any of the Australian banks collapse. Just bear in mind, you'll have to check the requirements because I believe, for example, if you have a savings account with Westpac and you have a savings account with St. George and you've got 300 grand in Westpac account and 500 grand in the St. George account, you won't be covered 250 grand for each account because Westpac owns St. George. It's under one banking license, which means you will only be covered up to 250 grand if the bank does collapse. And you'll have to check if your institution is part of the banks that the government does cover. Even little things like if you have an offset account, I think I saw online it does cover if the bank does collapse. However, it will not cover a redraw account. And a lot of people aren't aware of that because a redraw account does do similar things to an offset account. So I'll just give you a quick rundown for those who don't know what a redraw and an offset account is. Essentially, if you have a home loan, you can attach a facility to it called either an offset account or a redraw account. Both accounts let you offset your home loan. So if your home loan is 500 grand and you have 100 grand in your offset or redraw account, you only pay the bank back interest on a $400,000 loan because you've got 100 grand in the redraw and the offset account. However, the offset account is deemed as a deposit account, so you can take money out, put money in more easily, whereas the redraw account, if you want to take money out, depending on your bank, you might have to apply, you might have to ask them, and you probably will have to pay a fee to take money out of your redraw account. So there's similar facilities, but not quite the same. So it's really important to do your research to see what you're covered for in a worst case scenario. But that being said, I think we're pretty safe at the moment for Australia, but that's just my opinion.